all, welcome back to my tutorial. This video is about candlestick charts. A candlestick is a financial chart used to describe price movement, and this was first developed by the Japanese. A candlestick represents the opening price, closing price, high and low price of the particular stock for a given day. So what does that mean? So for example, Netflix, it opened at $10 at the beginning of the day and it closed further down to $5. So it was down by $5 for a given day. And for the same day, it went as high as $15. That's the highest price it went. And as low as $2. That's the lowest price it went. But in consolidation, the opening price and closing price was $10 and $5. So this is the complete information you can see in a candlestick for a given day. A candle can be a bullish or a bearish. So a bullish is for positive price movements. Here you can see the opening price is down below and the closing price is way up, which means the closing price is higher than the opening price. The body represents how further we went from the opening price, how positive we were, whether we moved for $10 or for $20 or for $100. All that information is created within this particular candle. And a bearish candle, here the opening price is at the top and the closing price is down, which means for a given day we opened at a higher price like $20, but by the end of the day we went very down to $10. We were like in a negative price movement. So the body represents how negative we went. The body is usually red in color and it also depends on the charting platform you're in. A narrow range candle. So here you can see the body, there is actually no body here. This is like a daily candle. So for the last 4 days we were in a negative price movement. We were having a price movement that is going red, red, red. But on the 5th day, you can see there is no buying pressure or no selling pressure. The body is null. Here it means the traders are indecisive. They are yet to determine what kind of a movement they are going to go further, which is a very good positive sign that in the upcoming days we are going to go in a positive direction. So when we are going negative and negative and negative, and then the traders becoming indecisive, it means it is quite a good sign to say that they are going for a positive price movement. So this candle is small in compared to the prior candles. It means the traders are indecisive and it's low volatile and it's a low risk opportunity. A bullish expanded range candle. The earlier was about the narrow range candle. This one is about an expanded range candle and it's bullish. Bullish is for a positive price movement and expanded says the body is very expanded. So compared to all the prior 5 days, the 6th candle shows it has a very big body. So it has a good buying pressure, which means it has a huge demand. So this is a good indication that we are going to go further high, but we still need to watch for it. A bearish expanded range candle. Here again the body is expanded but it's red, which means we have a very negative price movement. The selling pressure is high. And the selling pressure high is due to huge supply. Everybody wants to sell away, so the upcoming days are negative. Shadow. This particular tail is called the shadow or the wick. The shadow is also playing a critical role because you see the body is very less. Say the body is like 1. Here you can see it is like 3 parts of the body makes this tail. So let's see. The wick or shadow represent direction of price movement. So here it shows we are having a positive signal. And here we are having a negative signal. Why this is a positive is like for the previous days we were on a negative side where there has been more selling pressure. Then all of a sudden the buyers are in. So they are trying to push the price up. That's the significance of this particular wick or shadow. And here you can see the sellers are trying to push the price down. So that's why this wick shows like we are pushing the prices further down. The sellers are in action. So a couple of simple patterns to note. Hammer. A hammer is a bullish reversal candle. So this candle is having a wick or shadow bigger than the body, and it's like looks like a hammer. It's like we are going for a positive price movement in the upcoming days. The buyers are in action. Shooting star. It's a reversal of hammer. Here the wick or shadow is again longer compared to the body, and here in the previous 3 days we are on a positive price signal, but then the sellers are in complete action pushing the buyers down. So the upcoming days are a negative price movement. A doji or a bodyless candle, it's again a narrow range candle and it's called as a doji. So here the traders are indecisive. Again we can see like in the previous days we were on a negative price movements, and in the upcoming day we are going for a positive price movements. So this is the dip that the traders are willing to invest. A doji is insignificant when this particular pattern, if you can see, the previous days there is nothing much volatile. It's like bouncing up and down, but it's within a narrow range. So this in this particular chart, doji doesn't have any kind of a significance. It will have significance if it is like a chart that is going up and then a doji is appearing. Then in the upcoming days it's going to be like a reversal. Gravestone Doji, yeah. So this one it shows like the chart, the shadow or the wick is again long. So here it's like gravestone, meaning that it's going to the upcoming days are going to be very negative. The opposite of gravestone is dragonfly. Again, it shows like the upcoming days are going to be positive because this particular lower long shadow represents positive price movements. That's it for today. Thank you again for watching my video. Have a good day. Bye.